Hey everybody, how are you doing? I hope you're having a great time out there. Again, my name is Jerry Garcia. I'm a local realtor here in Orange County, and thank you for watching this video. In today's video, we're going to talk about closing costs. Whether you're buying or selling, there is closing costs involved with the transaction. So I'm going to go over some frequently asked questions about, what kind of closing costs are on a settlement statement. I'm also going to show you a copy of what a settlement statement looks like. And also we'll answer any questions if you have them. Please go ahead and put them at the bottom of this video, and then I'll be glad to answer any questions that you have. But I will break down every fee and show you what the total will be for a purchase. We're actually going to go over a settlement statement of a purchase that I completed for a client last year. So we'll go over a real life scenario so you can see what the closing costs look like. And again, if you have any questions or if you like to subscribe to my channel, please go ahead and hit that like button and hit that subscribe button. So let's go ahead and get started. All right, guys, let's go ahead and get right into it. Here's a copy of the settlement statement, like I mentioned. It's also called the borrower statement or settlement statement or closing statement. You can refer to it in a few ways. But in this case, we are doing the buyer's settlement or closing statement. And this is our final statement for this scenario. This is a purchase that I closed last year. I did go ahead and black out all the information, personal information from the homeowner that I worked with last year. But this is the final settlement statement, and we're gonna get right into it. As you can see here, we're gonna have the description. This is gonna be the description of our fees. And on the right, there's gonna be our debits and our credits. Pretty self-explanatory. We're gonna go ahead and get started with our total consideration, which is also known as the purchase price. So as you can see here, our purchase price in this scenario is $910,500 was the total purchase price. Then we're gonna go to earnest money, $25,000. This is a credit because this is the deposit that the home buyer in this scenario, this is the deposit that they put down when they originally made an offer to buy the property. So usually when you open escrow, you're gonna put down that initial deposit, and that's why it's shown here as a credit. And then the additional deposit is gonna be the final amount that you're gonna deposit into escrow to close the deal. In this case, the homeowner was putting a 20% down on the purchase of this home. So not only did they have to come in with that 20%, but they also had to come in with the closing cost. So these two sum up what they came in with for the closing. So we're gonna move on to prorations. In this case, we're gonna start with our taxes. Again, taxes are prorated depending on when you move into the property and obviously when the seller moves out of the property. And then they prorate it to whenever that date is. So each one pays whatever amount is due at that time for each. So in this case, the taxes were due. Usually they're due here in March in California. So the total was $34.73. And after being prorated, the buyer or purchaser, had to come in with $22.96. And here's the total that would be paid at closing. Now we are looking at the Homeowners Association. It looks like they're collecting for 1 month. This is to pay the March installment. As you can see here, $81.20, and that'll also be paid right at closing. Now we're gonna move on to our title charges. Here's gonna be our title premium, $11.79, and that is based off the loan amount. Now remember, purchase price is $910,500. Our loan amount is $720,800, which is 80% of the purchase price. So that's why that amount is on there. That's our loan amount. And as you can see here, the premium for title is $11.79. Now title charges are usually based off the loan amount. So if this would have been $300, $400, a lower amount, then you should have seen a lower amount on the fee here, depending on the fee schedule. Each title has their own fee schedule, which shows how much for the loan amount. Title endorsements, that's pretty common, $25. That's additional endorsements on the title policy. Deed recording, this is when the loan closes. You're going to record the deed where your name is now shows up as the new owner. This is county and local fees to record. That's our mortgage recording fee. Also has to be recorded with the county, and there is a fee for that. Special messenger, that's usually your title company. If they're special messaging something to the county, sometimes when you record same day, you do have to send a messenger, and that's what they're charging there for. Sometimes there's a use of messenger for other things during the transaction. Sub escrow fee, that's just a fee that has to do with escrowing and what they charge to basically work with our title in our escrow department here. And then finally, we do have a recording fee of $7. Pretty standard. Some title charges or title companies will show less little small charges and kind of lump them all in one fee or a couple of fees. Other ones will break them down like this one right here. So now we have our escrow charges. We have our settlement agent fee. Now keep in mind that when you do a purchase, you as the buyer, you're gonna pay a settlement fee, and then the seller is also gonna pay a settlement fee or an escrow fee, and each one will pay their own. So when we look at the other statement for the seller, you're also gonna be seeing a settlement agent fee. In this case, this is just the buyer's settlement agent fee. We have our loan tie-in fee. Again, this is related to the loan. The escrow company is going to be communicating and going back and forth with the lender. So this is part of their fees. Email document fee. This is to email the documents usually to the notary. If you're doing a mobile notary, they usually have to email those documents to them for the final signing. And it could be anywhere from 60 to 100 pages. So sometimes they will charge a fee for that. Wire fee, that's when the wire the funds. So they do charge that. Archive fee, not sure exactly what that's for, but I believe that's regarding archiving the files. Escrow companies are supposed to keep these documents in file for at least 3 years or so. So they usually do have to store them somewhere electronically, but there is a fee for that because obviously they pay for space somewhere to get those stored. And then there's an admin fee, $75, and a messenger fee again for $15. Now, again, some escrow companies will kind of lump some of these together and just give you a couple of fees. So it doesn't always necessarily look exactly the same, but these are some of the regular fees title and escrow will charge. So you'll see most of these. If you see additional fees, just ask what they are. Sometimes you can get those waived if you ask. Sometimes you cannot. So if you want to save some money, it doesn't hurt to ask if some of these fees can be waived. Now here are lender charges. This has everything to do with the lender, with the loan, and all the fees involved. Again, the new deed, there it is, the loan amount, $720,800. Our tax reserves. Now remember, if you're doing impounds, which basically means that you're going to have the lender collect for taxes and insurance, and they're going to pay those for you every month rather than you paying them on your own. So what they do for this is they basically take your full year taxes and they divide those by 12, and that's going to be your monthly amount. In this case, they're going to collect 3 months so that they have enough in reserve to pay future tax bills. Okay, so that's that 2823, that's collecting taxes. And then here's your homeowner's insurance for 4 months, $355. So these two numbers right here are basically going to go into your escrow account or your impound account, which is going to be used to pay future taxes and insurance. So these are called prepaids rather than closing costs because you are prepaying fees that you'll later have to pay for. So these are not costs to the loan. These are prepaids that you do in order for taxes and insurance to be paid later. So they're considered a little different. We do have a loan fee that's related to the rate, what the homeowner had to pay to get the rate that they wanted. So they had to pay some points, and that's the $36.40. your interest, right? 1,796. That's when you close your loan. You usually have to pay that month's interest, okay? Because remember, you're not gonna have a payment till the following month. So that's why you get interest collected. And the rest are pretty self-explanatory. You got your appraisal fee. As you can see here, it says POC. That means paid outside of closing. Usually your appraisal fee, you're gonna pay that directly to the appraiser when they come and do the appraisal. So they're showing it here, but it's not being charged anywhere because it's already been paid for. And again, POC, paid outside of closing. You got your floodser. This is to confirm if your property is in a flood zone. Your tax service to AMROC. This is related to the taxes. And the title company, $25, pretty standard. Your underwriting fee, this is from the lender. Most lenders charge either underwriting fee, some will charge underwriting and processing fees. In this case, it's $9.99. You have your life of loan, flood certification. This is just another certificate that they provide, and it's part of the loan. And then your tax service, $50, okay? We do have a lender credit, so this is actually on the credit side. If you see here, our credit side, you see a credit for 1,027. So the lender is giving a credit to the buyer. It could be related to the rate or something of that nature. But sometimes when you do shop for rates, depending on what kind of rate you can get a credit from the lender. And then we have our credit report. This is for them pulling your credit. And there is that processing fee I was telling you about for $9.95. And then we're gonna move on to page 2. Right here we have our homeowner's insurance. And this is paying for the full year. Since you are buying the property, you pay the full premium at closing. And then the other 3 months that were collected, that was to pay next year's bill, okay? We have our title loan document signing. This is our notary, $250. Usually a mobile notary is gonna mean that you're gonna pay a higher fee. If you do it at escrow, at their offices, usually it's $150, a little less than what's showing right here. And then our association dues, $84. This is an advance payment to the HOA. Maybe there was additional documents that needed to be paid for. So these are some of the standard fees. Again, this is a 2-pager with all the information and breaks down all the fees. You will sign one of these at closing when you sign all the final documents, but that will not be the final. The final will come to you a few days later once they pay out everything. And then once they do the final numbers, you'll get this document in the mail. And it usually is going to be very similar to the one you're going to sign at closing, but sometimes there's adjustments that they have to make regarding when it actually closes, interest, things of that nature. So sometimes the final will be a little bit different than the one you signed when you signed that closing. But that is it. Again, any questions, please go ahead and put them on the description and I will answer those for you. But this is what it looks like. This is what the numbers look like for a buyer if you're looking to buy a home. Now, if you add all these numbers up on here and you look at page 2, the total amount here for the buyer was $929,379. So again, the purchase price was $910. If you subtract $910 from $929, just to kind of round up the numbers there, this was $19,000 in closing cost that this homeowner had to come in with. So that is the difference between the $910 and the $929. So that is how much closing cost and this homeowner had to pay at the closing. So that's to give you an idea. If you guys have any questions, again, let me know. And thank you for watching my video. I will be posting another video showing you the seller side of the settlement statement, so you do have both sides. And I will link that to this video in the future. So again, thank you very much.